All right. Well, good morning, everybody. We welcome you to the St. Tammany Chamber webinar today. We have a lot of people who registered for this because there's a lot of information getting out to you guys. We're glad you can join us as we're doing our best to get good information out to you from professionals who know exactly what they're talking about, who are in the trenches with this right now. So first and foremost, we hope everybody's staying happy and healthy. Enjoy, staying away from this illness is going on, and wish you guys the best. But we have, of course, this is a panel we put together based upon your questions and your needs here at the St. Tammany Chamber. We're calling it welcome to our Ask Our Attorney, our banker, our CPA, and our insurance agent. So joining us live is going to be David Landry from Carver Darden, Russ Foster of Carver Darden Law, David Boudreaux with Hancock Whitney Bank, Carrie Calvin and Jen McGinnis of Bourgeois Bennett CPAs, and we have Alan Case of Lowry-Dunham Case and Vivien Insurance joining us as our expert speakers. And before we kind of get into, because we've got a lot of questions from you guys in advance, we have, of course, our own agendas of things to cover for you to help you sort through these things going on right now. We do have a couple of quick, you said some quick housekeeping, I guess, instructions for us.
I do. So a few things. We're going to share a couple of things today, and those will be posted into the link chat, and I'll send you an email link as well for the sheet that we're going to do that's going to be the difference between the EIDLs and the PPP. My name's Jessica Hester. Forgot to say that. I'm the Director of Operations with the Chamber. Thank y'all all so much for attending today. This is our very first one. We are doing some more in the coming weeks. Look this afternoon for an announcement. We're going to be doing one on your personal health and wellness during this time of quarantine. Just for the format today, thank everybody who submitted questions in advance. They've been provided to the panel and they're going to address them in their talk. So first we're going to have Carrie Calvin, Jen McGinnis, and David Boudreaux are going to be talking about economic disaster loan program and the paycheck protection program. That's where the majority of our questions were. Russ Foster is going to talk some about the Family First Act. And then Alan Case is going to be talking about the insurance and the emergency 39 and 40 rules. You should have a chat box. After that, you can go ahead in the question and answer part and submit the questions. And then the panelists will jump in and answer the questions as we move along.
Now, I do have to add one thing to this. This does not constitute an attorney-client relationship. This is not to be considered legal or direct financial advice. Remember our panelists here, this is strictly for your information only. That's kind of our disclaimer, let you guys know. Of course, if you have questions, we encourage you to go back to your own attorney, your CPAs, your banker, your insurance agent, and get direct discussions from them. And of course, these people here are, of course, all members of our chamber. They can help you out. I'm sure you can reach out to them as well. Their information is available. Okay, so I guess we should go ahead and get started. Let's go ahead. I'm going to start off with Carrie Calvin, Jen McGinnis, and David. I know is going to be joining us in a moment. Differences between this.
I'm on, Tom. I'm on.
Hey, David, glad to have you. The difference between this PPP and EIDLs. Let's explain what those are, and we'll tell you guys. Let's go ahead and discuss those differences.
Who wants to go? Y'all want me to
go? David. It's at David Boudreaux.
Yeah, I can take it. Yeah.
And the slides on the screen. Yes.
I'm sorry.
And if you can see, I'm not sure if you can see the screen. We have a slide up right now on that.
Yeah, I can see it. There's basically, guys, two programs right now that the CARE Act covers, and the two most popular ones are the PPP, which is the Paycheck Protection Program, and the EIDL loan, which is the Economic Injury Disaster Loan. We'll start with the PPP since that's the one that seems to be the most in demand. What has happened here is that the government's authorized $349 billion in forgivable loans for small businesses with employees that are have under 500 associates. And these loans are 100% guaranteed to employers who maintain their payroll during this emergency. So loans will be forgiven as long as they maintain their employment levels. The funds are going to be used to cover payroll costs, mortgage interest, rent, leases over the 8 weeks period from the time that they actually have made the loan. So, and they have to also maintain their employee levels as well. So starting tomorrow, April 3rd, small business can start to apply for this, and this will go all the way through June 30th of 2020 on there. So the other economic injury disaster loans, those can be applied for as well as the PPP, but they cannot be used for the same purposes. So if you're going to be covering payroll through the PPP through April and May, you cannot apply for an economic EIDL loan to cover the same payroll for the same period. So we cannot double dip on there. And guys, anybody else can jump in whenever any other panelists can jump in whenever they need to on there. So going back to the PPP, these loans will be out there for, like I said, you can apply for them up to June 30th. The interest rate is 0.5%. And then there's a 2-year payback window for the unforgivable amounts. But the proceeds from this loan are designed to be used to maintain your payrolls, to hire your associates back on there, and to keep them employed and ready to go for when the country does open back up and your business does open back up. You are ready and operational, close to near the capacity you were before we had the disaster. Carrie, anything you want to add to that?
Yeah, so the actual calculation for the loan itself, a lot of people have a lot of questions on this, but to make it simple, it's 2.5 times your average payroll for a 12-month period. So let's say in 2019, you had $120,000 in payroll. You divide that by 12, multiply it by 2.5%, you're going to come up to a $25,000 loan. That loan, after 8 weeks, will become forgivable as long as you utilize those funds for payroll costs, which is defined in the legislation. Plus, you can use it for interest on mortgages that were in effect before February 15th. So you can't come in and say, I just got a mortgage, so help me out with my interest. It's got to be before that date. It's gonna also be able to be used for utilities and rent. Anything else, Jen?
No, I think you covered it. Just when we get down to the tax section, we just mentioned that if you're going to do the loans, some of those tax credits, you can't also do those too. You can't double dip.
Right. So payroll costs is going to include your salaries, wages, commissions, similar compensation. It's also going to include tips, vacation pay. It also includes health insurance that you're paying on behalf of the employer. So if you're paying the employer portion of health insurance, that's included in your total payroll costs. It also includes any sort of retirement benefits. Now, you also have a cap of $100,000. So if someone makes 125, you have to cap them at 100. Let's see. I think that's about it for the total payroll cost. Oh, also.
And also, if you've been in business longer than a year, they're looking for the payroll between, year over year. Is that correct?
Yes, and then also
so they're looking for payroll between March 31st, 2019 to June 30th, 2019. That average, correct?
If you have been employed for the whole year of 2019, my understanding is they're going to calculate it based on 2019 numbers, and you're going to have to provide support for that. So your support's going to come from your payroll, quarterly payroll reports, your 941s, then they're going to drill down and get your W-2s along with your W-3. If you are a sole proprietor, independent contractor, they're going to look for 1099s and other support. The other thing to be aware of is this is a small business loan. So you're looking for employers that have employees of 500 or less. Now, they did relax some of the affiliation rules. So if you are an accommodation or in the hospitality industry and you have a NAICS code of 72, then historically you would have had to be combined and you would not have been considered a SBA. However, they've relaxed those rules. because of all the hardships these restaurants and these hotels are incurring. So it's by property at this point.
Hey, Carrie, this is Tom. Let me add a question of this. This has come up. It said, if I'm self-employed but not incorporated, can I get a PPP to cover what I would have made these 2 months based upon canceled jobs?
So self-employed individuals are eligible for the PPP.
Another question was, what about businesses that are just starting up if you added employees or rent after February 15th?
If they were in business as of February 15th, yes. If they are not, then no.
And Dave Boudreaux, this question is for you. Will this loan become a grant or is it still considered a loan?
I'm sorry, is that for me, Tom?
Yeah, it looks like it was a question for you, for the banker. Will this be considered still a loan or is this going to be considered a grant? Or Jen or Carrie?
Well, it's going to be forgiven providing they use all the funds for payroll, interest on mortgage, rents, lease payments, and utilities. If they don't use at least 75% of that for that, then it will turn into a loan at 0.5% amortized over 2 years.
But the theory behind this is it is beginning as a loan, but after the 8-week period, then they would file for forgiveness and it becomes a forgivable grant. Right, David? I think?
Yes.
Yeah.
That is correct.
Right.
And that forgiveness is not taxable income.
Correct.
So just so you know, once that amount is forgiven, you will not be taxed on that amount.
But you can't take it as an expense next year.
Correct.
Yeah.
Some of the questions have come in, and it can be for anybody on this. If I've laid off or furloughed employees, do I need to rehire them to qualify for the loan?
So you have, yes, you would want to do that because the calculation is based on number of employees. So if you have a reduction of your sales force or if your employees from last year, so if you have a 25% reduction of employees, you're going to get a 25 reduction of your total loan forgiveness. Just in theory.
Guys, what kind of record keeping will businesses need to produce to apply for the assistance related to the payroll, business expense, and COVID-19 related expenses? Or is it just going to be payroll and rent and utilities? And David, I'm not sure if you guys have put this out. Isn't there like a list of suggested record keeping or documents they're going to need?
Yes, they're going to need, yes, as Carrie said, they're going to need, basically they're going to need all their payroll wages, paid time off, paid vacation, family leave, medical benefits. They're going to need to have all that information available for us to be able to verify what their payroll was over the 8-week period, or what is 2.5 times their payroll.
Okay. What about those self-employed people? I say self-employed, but who do have employees and they let employees go and they put them back on to take advantage of this, and they're using them under their payroll. But then the actual owner themselves doesn't necessarily take a check. They just they just take income out, as you know, a lot of business owners do. They may not necessarily take a check on their own. They just take funds from the company just to cover themselves. What proof or what are they going to be needing to show themselves, or do they have to put themselves on the payroll?
That seems like there's a lot of pieces in that question. There's still the rules and the regulations that are coming out. Jen, you can chime in on this, but I think it's going to be based on last year's numbers. So if they didn't take income last year, I don't think that they can automatically start taking income in the current year. And distributions are not included in this.
I think what Carrie
that's my understanding of it as well.
Is that we still don't know all the answers in regards to self-employed people. And that we're still waiting on guidance on that.
This may be another tough question for you guys. For nonprofits, is PPP considered federal dollars? If so, does that then trigger the nonprofit to execute a higher level audit the next year?
The guidance is not out on that. I will say that 501c3s are eligible they have not come out with rules and regulations on that, but typically it's 500,000 or above. So I'm not sure what their, I'm not sure what their total loan forgiveness would be for that.
Here's another one. I own vacation rental property and my reservations were canceled in March, April, and now May and beyond. Each of my properties have their own LLC. So I'm wondering if I would be able to get assistance from the COVID-19 funding bill that just passed. I lost over $30,000 from cancellations alone and have mortgages, utilities, HOA fees to pay on each of the properties.
Yes, they can. They can apply under the EIDL for that.
So they just show all those lost costs of what they would have had?
Yes. Yes. Now the EIDLs are really being run through the SBA. They have to go to the SBA's website and actually apply for that. And they are offering a $10,000 instant grant for that, for folks that are applying through there, whether they approve or not for the disaster loan.
Now, David, that $10,000 instant grant, is that coming from the banks or is that coming from the SBA?
No, it's coming from the SBA.
Okay.
When you fill out the application, actually, I've walked through the application process yesterday. It's pretty simple. The initial application process, that is pretty simple on the SBA's website, to get it started. So, but yes, landlords can apply for their working capital, and it'll also be come through there.
Okay. Another question: is unemployment totally unrelated to the SBA grant?
Yes.
Okay. If so, what are there any? Well, I'm sorry. Just as if so, what are the circumstances? Is the SBA grant or a loan that may be forgiven under certain circumstances? So is the SBA going to be forgiving any of their things? To my knowledge, I have not heard that.
I have not heard that the SBA was going to be forgiving theirs. No,
yeah.
except for the grant, the initial $10,000.
David, someone said you just mentioned that $10,000 grant. They're asking, can you give any more details about the grant, that $10,000 grant?
Well, when you apply for an EIDL loan, part of the application process is actually if you would like a $10,000 advance within, supposed to get to you within 3 days. You enter in your banking information on the system, and whether or not you're approved or declined for the loan, they go ahead and give it to you, and it's totally forgivable.
Okay. If I am the owner of an LLC and the only employee of the company, do I still qualify for unemployment benefits or the 7A program forgivable loan?
So historically, they would not be eligible for unemployment benefits. However, they have opened that up. So yes, they should be eligible.
Okay. And guys, as I'm talking to you, I have a few more questions that have just come in. I'm just trying to cover that before we move on to the next part. Let's actually do that just out of time, for time. Let's talk about the Families First Act. Russ Foster, you kind of covering that for us. Can you discuss the Family First Act?
Sure, I will do. And first, though, just a couple of quick things on unemployment. Unemployment has been significantly expanded. So for those employers that I've been talking to who are really unable for different reasons to utilize the Family First Act or some of these other, their business has been hit too hard. They had to let people go. It's been expanded in terms of time. It's been expanded with a $600 kicker on top of the $247 state max that we typically have. And it's been expanded for the types of employees who can get it, including those who are self-employed in some circumstances. And for example, sole owners of businesses who consider themselves employees, and perhaps even those who don't. So the LWC has issued some guidance on this. It's on their website, and it is, I noticed it was couched in terms of may be eligible. So it's not necessarily promising the benefits, but they are actively encouraging everyone who even might be eligible to apply. So unemployment is a bigger deal now than it was just a few days ago. And then one little thing on the CARES Act, I yesterday was looking up the utilities. I know that could seem like a relatively small piece of the puzzle, But for some companies, telephone or cell phone bills are a big deal if they have a large sales force, for example. And utilities does include internet and telephone charges as well. So utilities has a little more of an expansive definition than we might have thought. So take a look at that as well. Regarding the Families First Act, that was seems like old law now. It's passed just a week ago, but we have 500. That's for 500 employees or fewer. And the thing I would say to remember about that is that it is employee driven. It's not something the employer can just assign to the employees. This is for companies that are still, quote, operating on some level, and for employees who need to take the leave for one of these 6 reasons that may be familiar to many of you now, but essentially they have to do with numbers 1 through 3, where somebody is actually dealing with the virus in some way, or numbers 4 through 6, generally speaking, deal with those who are having to take leave for what I'll call caretaker reasons. And there are 2 levels of pay depending on which leave is provided, and they're backed by tax credits. There's also been an expanded FMLA that takes you from for 10 more additional weeks, but it's specific. It's only for those who are having to take care of a son or daughter, which are defined terms under the FMLA, which can be a little broader than just, for example, biological child. But that is at the lower level of pay at maximum $200 a day, but that can roll on for 10 more weeks. The emergency paid sick leave portion, that's up to 80 hours, maximum $511 a day for those 80 hours.
And panelists, I'd just like to bring it up to you guys. You should be able to see on your screen as well some of the questions and answers, because some of these questions I have been able to ask you guys to get everybody's input. But you can also, our panelists are able to sometimes type their answer back in to those recipients. So guys, if you see that, go ahead and some of these have been asked already. You may want to be able to type those answers back into them as we go. Dave, Landry, or Russ, I'm not sure if you guys have covered this. How does the paid medical leave work for employers who have under 50 employees whose income is disappearing every day?
Well, I'll go ahead and take that one, I suppose. David, Landry, feel free to jump in, but that's a tough question, and I think I've actually been dealing with that quite a lot. And I'm going to give a kind of a simple but blunt answer, and that is, I don't know that it works very well for employers like that. One thing you can do, of course, is so long as the company's hanging, you got to have the employees or you can't use the act, right? An employee can't take leave unless he or she still has a job. So one thing I am seeing is some employers are allowing their employees come to them, they qualify for the leave, they take it, and they pay them and hope to get the tax credits. But eventually, if they can't stay in business, and many cannot, then a layoff has to happen. Many cases already has happened. And of course, once somebody's been laid off, they're not on leave. You have to be still an employee to be on leave. So that's one answer. I noticed that the question had under 50 employees. There is a process that is still relatively ill-defined of applying to the Secretary of Labor for an out-and-out exemption from the Families First Act, okay? And I don't know anyone who's actually filed one yet. The frequently asked questions on the Department of Labor website, I did want to mention this, have gotten a lot better. They were issued last week, and I believe there were 24. For those of you out there who haven't checked back, there are now 59. And as far as we can tell, it happened either early Monday or over the weekend. So there is, the guidance that we're getting is growing every day. But in terms of filing for that exemption for small employers, we don't have a lot yet. We just know that it essentially would be, if complying with the act is going to put you out of business, then you may well qualify for an exemption. You'd have to file it with the Secretary of Labor, federal.
Thank you. Going back to an earlier question, Jennifer, this one was targeted to you or to Carrie. What about mileage for salespeople? Can they include that in their calculations?
Calculations in the PPP, their mileage?
Yes.
No.
Okay.
Strictly payroll costs.
And Carrie, can you address the questions around the number of employees specifically, full-time versus part-time? For example, restaurants have reduced their full-time to part-time staff with historic average payroll of $10,000 a month, but now only $4,000 a month is the next 8 weeks.
So that's going to be based on, if, for instance, on this example, you have about a 60% reduction of your payroll. So your forgiveness would be 60% of what the original loan amount was. It's going to be based on an average compared to last year to this year. And if it's a reduction, that percentage that you reduced, your loan forgiveness will be reduced by that amount.
Okay. Thank you. While we're on the attorneys, Dave, Landry, did you want to cover your part?
Well, Alan was going to talk about insurance next.
Yeah, okay, we'll do that. You're right. Thank you. Okay, covering our insurance discussions and questions. We have Alan Case. Alan, go ahead. Why don't you just cover some of what you've been discussing regarding the insurance and emergency orders, and then I have a couple of questions for you.
Sure. I know many of you out there have, a lot of the calls that I've been receiving is applied to business interruption, and I'm sure many of you have had and suffered some serious interruption in your business, and to call your insurance agent and only find out, well, you received the disheartening news that it doesn't apply to viruses. And first, let me clarify that only a company or claims adjuster can make the determination that a claim is denied. But what I can do is I can tell you that in the majority of cases, the vast majority of cases, business interruption is not priced and it was not intended to apply to viruses. So you might be asking yourself, well, why did I buy this if it's not going to apply? And the answer is, well, if you had a wind or a fire loss, it would apply in those situations. The business interruption is associated with your property policy. So you have to have direct physical loss to your property in order to trigger the coverage. Well, yes, I know a question was asked about lawsuits. Yes, there's been lawsuits, and yes, there's been bills introduced to try to establish that a virus might be considered direct physical loss, but I don't have much faith that those are going to pan out. And the reason for this is that a widespread situation like a virus, in private insurance is not designed to cover something that's going to happen so widespread to all at the same time. Other examples of this are war, nuclear radiation. These exclusions are pretty standard. So an interesting example is also flood. Flood is not covered by commercial insurance, property insurance, so it's excluded there for the business interruption. If anybody remembers, after Katrina, you had the wind. Was it wind or was it water? And business interruption did not apply if it was in the event of a flood. So it's similar here. So as a result, I think the most likely avenues for relief are going to be in some of the federal aid that's been mentioned previously. I do know that the National Council of Insurance Legislators is working on a federal claims fund, similar to like the Victims Compensation Fund that was established after 9/11. We'll just have to wait and see where that goes. But so what is the insurance industry doing to address the COVID-19? Well, you have 2 emergency orders that have been given by the Louisiana Department of Insurance. The first one is Emergency Rule 39. And Rule 39 states that if you have, it must allow the insurers, admitted insurers, must allow for a midterm audit for commercial policies. So if you had an increase in your rating basis on your, as a result of the virus, whether it be sales or payroll or attendance or whatever that rating basis might be, you can call your company and they will need to give you some relief in the form of return premium. This is, from what I read, it applies to admitted companies, but I've been saying, there's no reason why, even if it didn't apply to, if you're insured through a surplus lines carrier, that you wouldn't be able to call and get the same thing. I mean, they should be able to go and adjust those figures and give you some relief there. The other rule is Emergency Rule 40. And Emergency Rule 40 states that the policy cannot be canceled or non-renewed. This went into effect as of March 12th. So if you had a policy in force after March 12th and they were canceling it for some reason, or they can't non-renew you, even for non-payment, so they can't do that. Important to note here is that is not forgiven. going to forgive the premium. You'll still owe it at the end of the period, which goes to May 12th. And so you'll owe that money at the end. So if you didn't intend on renewing, don't renew just because they can't cancel you.
Okay, Alan, let me clarify something you just said. Alan,
Sure.
let me clarify something you just said. So does that go for health insurance, auto insurance, homeowners? So you're saying right now people can defer their premium payments until after May?
Yes, that's correct.
Okay.
They can't cancel you. They can't cancel you. They can't send a notice of cancellation because you're not paying, and they can't not renew you. So yes, that's correct. People still owe it, but they can't do it. That's correct. The other part of the Emergency Rule 40 is that the carriers are supposed to renew you at your expiring rate while this emergency order is in effect. So you're not really supposed to have an increase in your policy. Now, there's been a lot of interpretation. We've had a lot of back and forth. It's kind of a heated debate of how this is interpreted. Does this mean that they're going to issue a short-term policy until May 12th? Does it mean it's going to be an extension of your previous rate? Well, we don't know. The Department of Insurance is going to issue some clarification about this. They're supposed to do it perhaps today. But in either case, if you have received substantial rate increases, you want to talk to your agent about this. It might not be a good idea to just extend it. It might be that there are other options available to you. Talk to them about it. Talk to your agent and see what the best avenue for that is. But if you did have significant rate increases, you want to do that. But those are pretty much the rules. And I've discussed business interruption. If anybody else has any questions, I'm happy to answer them.
But Tom, one other thing I wanted to add is that, as Alan mentioned, there have been several lawsuits out there. There have been about 5 that our law firm has been closely monitoring. The first one was filed here in Orleans Parish by the Oceana Grill. And also there's one in California, Illinois, one in Texas, and 2 in Oklahoma for the casino operators. As Alan mentioned, one of the critical requirements is showing damage to your property. And that could be to your own covered premises, or if things were closed because of civil authority, damage to another's premises. But you're going to have to show that you actually had damage to your property. And what the attorneys are arguing is that the coronavirus is on the actual property. And if it's on there for a certain amount of time, that has damaged the property and will require remediation. The other thing is also, if there's a virus exclusion in the policy, in 2006, ISO started using a virus exclusion. So that's something that the lawyers that are bringing these lawsuits are alleging. But we're closely monitoring those cases. And at this time, that's all we can say on that.
Yes, so it sounds like this is going to be in maybe litigation for years, how this may come out.
Could be.
Okay, and I want to remind everybody, we have about right now 65, 66 people who are on this call, and we have more people joining us. The information we're giving you guys this is not any kind of attorney-client privilege. This is just legal. This is not legal or financial advice. It's strictly information for you. We're encouraging every one of you. The panels you're seeing today are members of your Chamber of Commerce. They're volunteering their time to come in and talk to you and use this brain trust to get this information out to you. But we're encouraging all of our people who are on this and listening to this, some of you who are listening to this recorded, talk to your local bank, talk to your local CPA, talk to your attorneys, your insurance agents, and get the facts directly from them and how to help you, because these guys are all learning this thing. As you guys all mentioned, it's changing almost by the minute about what some things going on. Guys, I want to kind of start now opening this last part of this discussion, open this up to some of our questions, unless there's anything I missed from any of our panelists that you guys really need to discuss. If not, I'll start asking you guys questions that have been coming in. With that pause, I guess I'll go right to the questions unless you guys want to chime in some more. Someone writes, I'm unclear on this. If an LLC owner with no employees can apply for the SBA EIDL $10,000 grant, if so, how do I have to use it? Is there a specific way that the money has to be used? Anybody know that? I think we lost. Is Dave Boudreaux still joining us? Looks like.
Here, can you hear me?
Yeah, now we can hear you, David. You must have been muted. Did you hear the last question?
Yes, I heard it. Yes, it could be. It could be used for working capital. The grant could even be used for payroll, but it can't be used for the same payroll that was applied for through the PPP. It was so if you get payroll to get 8 weeks of payroll through the PPP, let's say for April and May, that grant money would have to be used for, let's say, May or June or July, or they could deduct it from the PPP portion that you have. And when you go on the PPP application, it does ask you about the middle of the page, on the first page, if you've applied for any EDL money or any other SBA program money on there. But it can be used for whatever that, any working capital needs that you may need.
Yeah. So basically, you have to take out the SBA loan to get the $10,000 grant, or is that just
you have to apply for? Yes, you have to apply for EIDL loan, and it's up to 10,000. It's up to 10,000.
Okay. Guys, some of these questions you may have covered, but I want to kind of make sure we cover them and go back through them. Someone asks, if a company has laid off employees, do they have to rehire those same employees in order to qualify for the forgiveness? And was there a deadline to rehire them by?
They do not have to hire the same people.
And is there a deadline that they would have had to rehire them back on in order to use the loan forgiveness?
I've seen 30 days, but I can't verify that's an accurate statement.
Okay. Can 1099 income be used for the 250% calculation and the subsequent forgiveness, or only the net income on which self-employed taxes were paid in 2019?
Question.
Good question.
I was trying to find the question.
Oh, second question. It says, can 1099 income be used for the 250 calculation and the subsequent forgiveness, or only the net income on which self-employment taxes were paid in 2019?
That's something that we are still looking through, so I can't answer that.
Okay,
Anyone else? That's part of that contract labor piece that we're just, it's very unclear.
Okay. Another question, would I count myself as an employee if I pay, smooth on me. Would I count myself an employee if I pay myself a small salary, but then also take a distribution?
I believe that's yes.
You can.
The distribution is not
yes.
included, but the salary is up to 100,000.
Okay. Someone's asking us to repeat this answer. They didn't hear this was mentioned on the PPP loan. What are the dates the payroll reports are based off of?
If you are, as long as you have been opened as of February 15, 2020, and you were active in 2019, it's going to be 2019 numbers. I've got calculations that actually start March 1st. I've heard webinars from the chamber along with other organizations state it's going to be based on 2019 quarterly 941. So I think that it's going to be up in the air, but I would believe it's 2019 if you have been open all of 2019. David, I mean, I know that y'all have your applications. What are the banks doing?
Yes, it's going to be an average of 2019 if you were open for 2019, and if you weren't, then it would just be the average of the time that you were open, from the time you were open up till February 15th of 2020.
Right, and then also if you're recently opened but you have not had activity in 2019, they're going to use the January and February of 2020. That's going to be your calculation. Yes. You're going to take that, multiply it by 2.5%.
Yeah. Someone asks, if they get the $10,000 forgivable grant, does that jeopardize their ability to apply for the PPP grant?
No, they cannot take the same funds. If it's 10,000 is going towards their payroll cost, that is going to be a reduction of the forgivable part of their loan. So you can't take the same cost.
You can't double dip. You just cannot double dip on that. So if remember, PPP is the primary use of it is for payroll. So if you should only be applying for PPP if you have payroll needs. For that. It's not really designed for working capital. It's not really designed to expand your business, buy inventory, things like that. So it's designed to get your employees back, hire your employees back, get them back on your payroll, and be ready to go when the country opens back up. Okay.
Dave, Landry, Alan Case, this one's towards you guys. If even though there is no insurance coverage for viruses at this time, since there may be a federal claims fund in the future, should we file an insurance company anyway so we can be in the pipeline in the event federal help is down the road?
Yeah, but we certainly can't discourage you from filing a claim. If you feel that it's necessary, if you feel like that's a thing to do, you talk to your agent and they give you the impression that it's not the intent, you want to file it anyway for that, I would suggest you go ahead and do that. We're filing all the time at the request of our insureds, with the understanding that they know that it may be denied, but go ahead and do it. Sure, absolutely.
Tom, I would agree. I would take the affirmative step and file a claim right now.
Go ahead and file a claim. All right. Sorry, just lost the question. If you have available lines of credit with your bank for your business and you have to use those funds to cover approved costs, can you still receive forgiveness with the PPP?
I don't understand. You can.
Looks like they're using their lines of credit to pay those costs. They're asking, since they've used those funds, can they use that expense to, and looks like get the forgivable side?
For an EBT?
I guess you'd have to be able to prove it was all used for payroll. So the costs are a wide range of things.
Right. I don't think that the use of funds is as important as the fact that you have verification and documentation that the costs are applicable to your organization.
I'll jump in if I can real quickly. As I'm reading that question, it seems to suggest, like you might see with some other SBA loans, that you would have to be unable to obtain credit elsewhere. And if that's the question, I believe I have read that that is not the case with the PPP.
Correct. That is not.
If you have credit elsewhere, it doesn't prevent you from participating. Not sure if that's what the question was, but if it is, I think we can answer that.
Panelists, can you discuss Form 77 that employers use to dispute unemployment claim by an employee that still has a job but decides to file for unemployment? David or Russ? I'm not sure if Russ is muted or not.
Yeah, well, I'm just trying to get my head around the question. I have seen nothing that changes the general rule that someone who has a job is not going to be eligible for benefits. I don't see why that would have changed, except to say that LWC has encouraged employees, even those who have lost hours, to apply. So the rules may have changed in some specifics, but to the extent an employer responds to a notice to base period employer by saying, hey, this person is working, sure, I don't see why that would have changed.
Yeah, I agree.
Yep. Another question, guys, is I have a reserve in my general account for emergencies. Am I required to deplete those funds before I can apply or qualify for PPP and or EIDL?
No.
You don't have to use it. Okay, great.
No.
Someone asked, is it really happening in 3 days? Are people able to really get their loans and their grants out within 3 days' time? From what you've seen, Dave?
It's a good question. Every bank is going to be inundated, and the SBA is backed up as well. So all I can tell you is be patient. We're going to try to get them out as quickly as possible. I have a lot of my teams that were, once lenders and managers are now underwriters and pushing these deals. Going to be pushing these deals through as quickly as possible. So it's kind of hard to answer that question. Each institution is going to handle it a little bit differently, and it has a little bit different capacity levels that they're going to be dealing with. So it's there's enough money for everybody to go around. That much I can tell you. So just be patient, and I think everybody's gonna get everything that they're asking, and most of what they're asking for anyway.
Dave Boudreaux of Hancock Whitney, 2 questions for you. Someone says, do they need to come into the bank in person to apply, since they're being told to stay at home and not go in person?
Yeah, we're working on that. I don't know yet.
Okay, but as of right now, aren't you guys, and okay, then the other question was, are all banks able to participate in this program, or does it only have to be an SBA bank?
It's got to be an approved SBA lender, yes. As far as coming into the lobby, you know, right now most banks are by appointment only. Not sure how we're going to handle this yet from a Hancock Whitney standpoint.
Okay. This question just comes in, guys. An employee who works part-time in the restoration business. The employee does not feel comfortable working even though work is available. The employee filed for unemployment. The employer is an LLC with under 50 employees. Note the employee has not been here for a year. Is the employer exempt from paying unemployment? You guys want to repeat that question?
As I'm hearing that one, this may be where the rules have changed, because it sounds like that person would have been with the employer long enough to have built up some base period with him, and then the rules for unemployment have been loosened. What I'm not entirely clear on is whether that quit. Normally a quit, that ends an unemployment claim. Someone quits, they can't claim it unless there are certain specific reasons that would constitute a constructive discharge. But in this case, I don't know if the fear of COVID would be sufficient. I do know that the rules have been loosened. I don't know about that one.
Another question, can you use the $10,000 EIDL grant to cover loss of rental income and then use the PPD to cover payroll and utilities?
Yes.
So it sounds like documentation, guys, no matter what you do, is going to be very important here. You have to, and actually they don't even apply for the grant, I'm sorry, the loan forgiveness until after the 8 weeks have passed. Is that correct?
Correct. So they can start submitting their the documentation for their forgiveness after June 30th. Is what I was told.
Okay. If someone has not filed their 2019 taxes, of course, Carrie and Jennifer, you're letting us know that you now have more time to file your taxes. They moved that to July 15th. Is that correct?
That is correct. You have until July 15th to file your federal and your Louisiana taxes. If you also had an estimated payment due for April 15th for 2020, that is also extended to July 15th for the federal, but not for Louisiana.
And from my own side, I've had people even ask me, they say, can they still fund their IRA for 2019? And the answer is yes, correct?
That's correct.
So they have until then to file. Okay, guys, I'm going through more questions for us. We're up to our last few minutes of this meeting. Is there anyone that has specific things we want to make sure we cover or did not cover from our panelists? Again, I think we're all good and quiet, making sure, because there's been a lot of questions coming out. It looks like these questions continue to come out. Let's see, can you use, you already answered these questions, so I'm making sure to miss anybody's questions. Corporation 2020. I think we kind of, I think we got everybody's questions answered.
Yeah, Tom, one thing I would add is that it would be prudent for a business owner to look at all of their contracts and see if there are any force majeure clauses in there which deal with performance with unforeseeable circumstances, and if those are applicable. So if I was a business owner, I would be examining my key contracts and looking for force majeure provisions.
Okay. This may be one of our last questions, kind of a big one here. Guys, January 2020, I rolled employees from one company into another company with common ownership. The receiving company's 2020 payroll has significantly increased, doubled, because of a merger that took place. Will I be able to use my 2020 payroll opposed to 2019? Both companies are still in existence. I'm not sure if that's Jennifer, Carrie, David, how would you guys?
That's a good one. That's a good one.
I mean, that's a great question. I think that she probably needs to contact her CPA so they can go through all the details on that one.
Because it sounds like more details are coming out as you guys mentioned, more information is coming out on a regular basis, and things are being changed.
Well, you have affiliation rules with a lot of this stuff, so I'm just not sure how all that common ownership is going to roll up with that particular question. So if they have an affiliation rule and they're in excess of 500 employees, they're not even eligible for these grants.
Okay. Fantastic. Well, guys, as we wrap this thing up, this was a lot of information. I tell people it's like almost drinking from a fire hose because there's so many things going on and so many different working parts. I know the St. Tammany Chamber will be sending out that earlier slide. If you can, Jennifer, if you can put that back up. Again, we're going to show this slide up. We're going to be emailing this out through our St. Tammany Chamber emails, as well as contacts for you guys. For anybody who's on this call, if you want to receive this, make sure you contact the Chamber. We'll get out to you that way as well. But it's kind of just our guide outline of kind of difference of these, as well as we're going to be sending out any contact information on our panelists we've had today. Again, because we had attorneys David Landry and Russ Foster. Our CPAs today were Carrie, Calvin, and Jennifer McGinnis. Our banker was David Boudreaux of Hancock Whitney, and Alan Case Insurance covers as our insurance specialist. So guys, thank you very much. We'll be also setting this recording of this webinar made available as well through the St. Tammany Chamber. So watch for those updates. We are sending out, the Chamber is sending out information daily, updates, president updates from our school system, updates as we learn more about this information, also updates from call-ins from our senators who are helping us as well. We're staying in very close contact with our senators as well and get information out from them, what's happening in DC. Please continue to forward your questions into the Chamber. They're working hard, but they are all working from home, is my understanding. Even though we do have a new office opening up soon in Slidell, that's still moving on. As you guys have known, a lot of the Chamber events have had to been postponed or canceled. And most are being postponed, so we'll see that coming soon too. Guys, again, panelists, thank you very much today. It's a lot of information. Again, we encourage people to reach out to your own banker, your own CPA, your own attorney, your insurance agent, but of course we'll have this information out from these panelists today, these experts who discuss this information today, because this is moving forward. Do not try to do this on your own. Use the experts. They know how to navigate this, and they'll make sure that this works best for you. Of course, we wish, of course, everybody to stay healthy. We will get through this. We'll be back to work soon, and boy, we all remember this one. My panelists, we're gonna remember this one. Having to all work from home, this new world of getting together. Thank you very much today. Guys, we will stop the recording and the meeting at this time. Thank you.
Thank you.
Thank you.